Clearly, China's tariffs would have a huge impact on two particular industries that export a lot of goods to China. That would be autos and airplanes. Phil LeBeau explains now why China's plan could be especially painful for investors and workers in those businesses here in the U.S.
At BMW's plant in Spartanburg, South Carolina, almost 1 out of every 5 SUVs coming off the assembly line will be loaded onto a ship and sent to China, where it will be sold for 25% more than the same model here in the U.S. And that's before an additional tax China is proposing. That would push tariffs on some popular SUVs in China up to 50%. Fact is, auto exports from the U.S. to China have soared over the last decade and now total more than 250,000 vehicles every year. That demand is one reason Mercedes and BMW have expanded production at their plants in the southern U.S. If there's a trade war and sales slump, will automakers pull back on plans to hire more workers? It's the same question being asked at Boeing, where it's been expanding production of its popular 737 line, with many of them headed for China, which is expected to order more than $1 trillion in new planes over the next 20 years. Will orders slow down if some of those planes cost 25% more? For now, Boeing says it's still assessing what tariffs, if any, China may impose. As for the automakers, they're taking the same approach, aware that the U.S. and China could still avoid a trade war. Phil LeBeau, Nightly Business Report, Chicago.